So, what if I told you that the biggest threat to the world's financial systems isn't the Federal Reserve, but an Asian island nation that is effectively bankrupt? Here's the thing: Japan is the canary in the coal mine for the global economy. Their central bank has completely lost control, blowing tens of billions of dollars trying to save the yen. And if their bond market breaks, it takes US treasuries and global liquidity down with it. Roberto Rios, aka Peruvian Bull, has been watching this unfold and says the implications are massive. Together, we are breaking down why Japan's collapse is inevitable and how it's going to trigger the most aggressive Bitcoin bull run we've ever seen. If you're enjoying my content, it would mean a lot to me if you could subscribe to the channel and like my video to support my journey. Thanks a lot. Now let's dive in to this episode.
All right, Roberto Rios, welcome back to Bitcoin for Millennials.
Thanks for having me.
Yeah, I'm happy you're here. We just talked off mic about a bunch of topics, but with you, I always find it interesting to talk about what you call, the canary in the coal mine. Not only you, but a lot of people, right? Japan is the canary in the coal mine of the next global financial crisis, and I am not following this. I have followed it before. I know a little bit about it, but you are the expert, in my opinion. So I'm very happy to talk to you. In our last episode that I'll link to, we really talked about the fundamentals, yen carry trade, cheap liquidity, people taking leverage, arbitraging. But, Japan has a huge problem, of course, aging, a lot of aging people, a lot of debt. And they are actually in a bigger conundrum than the US, but the US has been very dependent on this yen carry trade, right? So there's a very interesting dynamic going on there. So for anyone who hasn't listened to our previous episode, really about the fundamentals of this, I recommend you to check that out. I'll try to get that on the screen or definitely in the description. So if we kind of extend on where we were and maybe kind of like get a lay of the land, like where we're at right now, because this is what I just told you before we started recording, right? I feel like they can kick the can down the road for a very long time. They, as in, any debt-based financial system, whether it's in the West or in the East, it feels like, if you have the power of the money printer, then you can kick the can down the road indefinitely, as long as people don't wake up to the scam that it is. You recently highlighted that the Bank of Japan spent like $60 billion across 2 weeks to help strengthen the yen. And then it went up, like it looked stronger. And then, it retraced over half of that move in a matter of days. And so I thought it was really interesting because central bank intervention is never a good thing, whatever they say at a press conference, at least in my opinion. Do you think this is losing its psychological kind of effect? And how close are we to kind of like a true runaway currency event of a nation like Japan?
Yeah, I think, you're referring to the recent interventions, right, between April 30th and May 6th. The Bank of Japan intervened 4 times actually within that window and spent roughly $73 billion. So actually, after the final total, at the time I'd said it's like 65, but
Yeah.
After they reran the math, it looks like it was about 73 billion, which is the largest single month intervention, by the way, that the Bank of Japan has ever done in its history. But the concerning part, like you laid out, right, is that the intervention seemed to be getting much less effective. So in September of last year, some analysts from Bank of America had pointed out that about 1 trillion yen was needed to move the the exchange rate by 1. So, if you want to move it from 160 to 159, you need about 1 trillion yen. So you need, let's say, 7, maybe 10 trillion yen to bring it down to 150 handle. This time they spent that amount, actually more than that amount, and it only went down to like 153. And then it, basically retraced. So it basically had like around half of the effectiveness that it normally does in terms of actually moving the exchange rate. And so that tells you like this pressure that has been building, that has been growing on USD JPY, the short yen pressure, the carry trade pressure has been increasing. And this is notably right after the Iran war, was starting to be tied up. Right now, of course, we have had recent news that Trump maybe restarting the Iran war with the bombings restarting and the peace deal seeming to fall through. But at the time, right, late May to early June, there's a peace deal in place, and Japan, the strait was opening, and Japan didn't have the energy pressure that it had, let's say in early May or in April. At the time, everyone thought that the main reason why USD/JPY was so weak was simply because of the oil pressure, right? Japan imports like 93% of its total energy demand. It imports like 97% of crude oil, like 85% of nat gas. Huge energy importer. Basically, doesn't really produce any raw commodity by itself. They even have a tariff of 40% on their rice goods just to protect their small domestic rice industry so that they can maintain some semblance of food security. But overall, Japan has been seeing this trend of, less and less effective interventions, less and less effective rate hikes, right? Because in June, they also hiked to 1%, the highest since 1998. And again, it had basically no effect on USD/JPY. You see a retracement for like a few days, and then it starts climbing back up. And as we're speaking right now, it's at like 162.5, which is the highest it's been in well over 30 years. And that rate is, again, despite the fact that Japan is at 1%, a huge jump from where they were at zero or negative bound just a few years ago, and the fact that the Fed might be cutting, right, especially given the softer inflation print. So what that tells you again is Japan's weakness is structural, it's endemic, and it's not just related to simply an energy story or simply a rate story even between the US and Japan. The larger issue is what we've laid out before, is that the debt is just simply too high. The current government, Takaichi, with her populist right-wing party, is trying to push forth more and more fiscal reform to spend more money on, AI, infrastructure build-out, military spending. Potentially, she even wants to reform Article 9, which basically means that Japan would gain the ability to have its own army, navy, and air force, which right now it's only limited to a small defense force. So that would obviously also increase government spending. But all of this in conjunction just means that they're going further and further down this path, and this the end game here, like you said, it may be less of an acute event collapse, right? Like, oh, there's a singular event where the entire system falls and like USD/JPY goes to 300 within like 2 weeks, right? It's probably more likely that it's going to be the second option, which is just a slow bleed. And I think that slow bleed is going to speed up, but I still think it's going to be a bleed. So I don't see USD/JPY exploding here anytime soon, at least not unless there's like a huge exogenous shock, like a banking crisis in Japan that would cause that. But what's much more likely is that we keep seeing these interventions waste money. We keep seeing rate hikes have no effect, and USD/JPY keeps marching further and further south, causing inflation in Japan to continue to rip higher.
Most people stop too early with Bitcoin. They buy it, maybe move it to a wallet and think they are done. But they're not. The real questions are how you're securing it, how private your setup is, and whether you're verifying your own transactions or trusting someone else. And what happens to your Bitcoin when something happens to you? This is the layer that most people ignore, and it's the most important one. That's why I've been working with the Bitcoin Way. They help you set up self-custody properly, including privacy, cybersecurity, inheritance, and even running your own node. And they do it without ever touching your Bitcoin. They're not a custodian, they're your support team. If you're serious about this like I am, go to thebitcoinway.com/Bram, that's BRAM, to book a free call. They'll walk you through your setup, personalize everything to you, and help you get a much stronger position very quickly, whether you're a beginner or more advanced. That's thebitcoinway.com/Bram.
Yeah, it's pretty crazy that I feel that Japan is kind of like this playbook, or is the example of what will happen in basically every other place, right? In a debt-based fiat money system, the end is the same for everyone, right? Just at a different pace. Obviously, sometimes people ask me like, why do you talk so much about the US, etc.? I mean, that is obviously the world reserve currency, which is why it's the strongest, air quotes, right? But with almost $40 trillion in debt, you also have to question if that will ever be repaid or what good they are for their promises, right? And you see that, countries and big capital allocators are still buying US treasuries as if nothing is going on. But it's also something you don't really see in the media, right? I also read something that there were like JP Morgan executives in Japan. They were saying, they were warning people about hyperinflation, and that Japan was kind of like Greece prior to the 2010 eurozone crisis and stuff. So there are some people that are ringing the bell in, let's say, mainstream media or mainstream among a mainstream audience. But I've never heard anything about this on my local news. What is so clear to you about this basic insolvency of Japan that everyone is basically missing? Is it just as simple as the debt will never be repaid back? Currency debasement is only going to go faster, so there's basically zero trust. Or if you trust the state and still buy treasuries or bonds, you're going to get a nominal payback that lost its value. Is it just as simple as that, or is there anything else?
I mean, I would say those are just the overlying symptoms of the disease, right? The real disease runs much deeper. And I actually learned much more about this when I actually visited Japan in 2025 in March with Julian Figueroa and Isabella. We filmed a documentary there. And while I was there, I got to interview Weston Nakamura, who's one of the other foremost analysts on the BOJ and Japan Macro. He's a great follow on Substack and Twitter. But he pointed out that Japan, despite being a major, G7 country, is lowest in the world in terms of developed countries, with percent of population being entrepreneurs. And second lowest, the only country that's lower is Croatia. So Japan, despite being a developed economy, doesn't have any entrepreneurial base. And there's basically no, private equity or Silicon Valley or venture capital to speak of. If you're an entrepreneur in Japan and you want to raise capital, you go to the US. You don't raise in Japan because no one in Japan wants to take any risk. Nobody wants to take on, any real investment. Nobody wants to take a gamble. There's no capital formation in terms of innovation or entrepreneurship. The only capital formation that exists is because they operationalize and basically make things more efficient, an existing product. So for example, like cars, right? They take an existing, product, which is a, four-wheel sedan, right? Four-door sedan. And then they basically make the production process and the shipping process much more efficient and effective, so that's more reliable, but they're not actually creating new goods or services. And this can be seen in all different areas of the economy, right? So first of all, like I said, tiny share of entrepreneurs as a percent of the population. But even more stark is the fact that Japan is sending outwards, right, about like $50 billion for streaming services a year. So they have a negative streaming services deficit. So you think about, Netflix, Amazon Prime, you think about even data warehouse services, right? Japan pays for that. Japan has basically no internet infrastructure to speak of. And why? Well, because it has no large tech companies. There's not a single large Japanese tech company that has products, outside of Japan. Wow. So what that does is that especially when we're talking about high technology, software, new product creation, innovation that, you see in Facebook, you see at Google, you even see in hardware companies. Japan has none of that. And so they have to pay other people for streaming services or for, actual like data streaming. So when you think about like, Oracle or some sort of data infrastructure, data analytics company, they basically have none of those either. So they have to pay other people to do that. Overall, the economy is basically I would say zombified, and it's been that way for 3 decades, 4 decades. And the problem is because Japan has basically it's incentivized and pushed, right, this ideal of the salary man. And the salary man in Japan is spelled like SARRIIMAN. The salaryman is the guy who goes to work, works 10, 12 hours in a cubicle and goes home. And he doesn't ask for a raise. He doesn't tell his boss his ideas. He doesn't try to change things up at his company. And he doesn't even quit his job if he doesn't like it. He just stays there. He shuts up and he works like a good little soldier for the industrial economy, right? And that's like the cultural expectation for the Japanese. And because of that, I mean, there are cultural things that are also true about Japan. Like, it's very impolite to ask for a raise. It's very impolite to leave your job. It's very impolite to even be fired. So there's this term in Japan which basically translates to quiet quitting or quiet shunning, which basically involves a manager who has a person on his team that he doesn't want. Instead of firing him outright, he'll just give him less and less work until he has nothing to do. And then out of shame, that person usually quits because they feel, like they're not being utilized. And they kind of get the signal like, oh, I'm supposed to leave. So everything is about saving face and about, maintaining your personal honor and your dignity. But the problem with that is that, entrepreneurship, right? Innovation, creating new products, inventors, it's all about losing face. It's all about taking a risk. You might be wrong. You might create a software business and it goes nowhere, and you might look like an idiot. You might waste $1 million of investor capital, right? But that's part of the gamble of creating new things. And in Japan, that's socially and culturally unacceptable. And that's been reinforced, by the way, on a societal level by the Bank of Japan. You think about like not only obviously the fiscal and financial and economic consequences of keeping rates at 0% for 30 years, but also the social and the emotional, right? You've basically castrated an entire generation of young Japanese men. You force them into a workforce where, they're supposed to just do their job and shut up, and they're never supposed to innovate. They're never supposed to come up with their own ideas, and they're never supposed to recommend them to their boss. They're not rewarded for taking risk, right? Because there's no true entrepreneurship or innovation in the economy. The stocks haven't gone anywhere basically in 30 years, right? I think in April of 2024 is when the Nikkei broke its previous all-time high. And that was 30 years, actually 34 years after it had, broken that all-time high to the downside back in 1990. So there's been basically no return in stocks. Bonds are yielding in Japan, were yielding 0%. So there was nothing to do outside of a corporate career. And so, risk aversion and taking the safe route became culturally embedded in the Japanese psyche, and it's punished young men, maybe no more than any other demographic in Japan, because those young men are unable to, innovate, take risks, find jobs, get married, have a wife, right? And that confidence that comes from taking a risk and then failing and then taking a risk again and then succeeding, obviously, like I said, relates to the dating world, relates to relationships, relates to friendships, right? Young Japanese men are more online and they're less romantically involved than they've ever been before. And they're already at a super low rate. The birth rate in Japan is well below replacement levels. And last year, 970,000 more people died than were born. So they lost basically 1 million people of their population. And that's concerning, right? Because a shrinking population is a dying population. And that's exactly what the Bank of Japan has incentivized with their rate program.
Wow, it's pretty dark in a sense that, in my opinion, like they had a great time for a long time, but the fall, the deceleration is very quick in that sense, right? Like you said, like once you have not been able to create something for an entire generation, then that gap also involves not their children, right? If there's no children, like so the continuation of that also slows down, and I think that then cascades, right? Like I think there's also in Japan like big discussion with immigration and stuff like that, because they need people, right? But that changes. They're very deeply rooted in old culture, right? And so yeah, I found it very, very interesting to follow. You mentioned this new prime minister, right? There's like consumption, there's tax cuts, but there's also massive military stuff. Where does that even come from if you don't really have the money, or the outlook is that you will have less money? Um, is that just a way to gain popularity? Is that trying to become attractive to create jobs, right? Like, okay, if I make the military bigger, but I onshore everything, that I also create jobs or something like how do you even look at that? And maybe also, I think today or yesterday I saw um, there were also votes or decisions about Bitcoin related stuff like ETFs or something like that. I'm not sure if that's true. I mean, I saw it, so I wonder what you think. But like, it seems that they go into this direction where it's kind of like an all or nothing. We're just going to try everything to see where we're going. Is that the case, or is it something else in your opinion?
No, that's absolutely true. I mean, Japan has been. I wrote in this one of my Substack pieces that uh, really went viral on Japan. That Japan is the monetary experiment lab for global
Yeah,
central
yeah,
banks. Right?
yeah, yeah,
Everything that central banks are doing now is something that they've already tried before in Japan. QE was created in Japan in March of 2001. 0% interest rate policy that was created in February 1999 in Japan. QQE, which is basically like quantitative easing, but for specific targeted at specific asset classes like corporate bond ETFs or equities ETFs or even real estate investment trusts. That was also piloted in Japan. And same with yield curve control, which is basically infinity QE to bring bond yields down to zero.
yeah,
So it's all been tried before in Japan. And so what we're seeing now is, again, the end game of this system is what actually happens. What's the terminal end state of, infinite debt, infinite money, and no growth. And it's a complete, you could say, like zombification, freezing of economic conditions and no growth for decades while you slowly burn the populace down
yeah,
in terms of their vital life force, right?
yeah.
But it's
I was
not, again,
just
it's not sustainable forever.
Yeah, I was just thinking about when you were sharing your previous answer, with the younger generation, etc. It feels like you're seeing what, at least in the Bitcoin space, we've been talking about philosophically, right? Like,
Mhm.
if the money is soft, your life is hard, right? But also in terms of like time preference and just the ability to, like you said, right, explore and try and fail, and therefore you grow and you progress, right? Like, if there is nothing to work for, in a sense that, if it becomes clear that your future will actually be more uncertain no matter what you do individually, right? That's where you lose all motivation to actually um, contribute or even take risk, and then especially in this context of the culture of Japan, right? Like, um, that's kind of my takeaway from that. Like, you're also seeing what we're discussing philosophically. You're actually seeing it happen. How the degradation is also very much psychologically and uh, spiritual, even, right? Like, when you said like there's no tech companies in Japan, this and that, I'm thinking like, Nintendo, Sony, like all these things, but that's from before. That's not now, right? So um, that is gone basically. Well, okay, Nintendo is legendary, but you don't keep a country running on on Nintendo, probably, right?
Mhm.
But yeah, that's pretty crazy to see. I actually kind of wanted to make a bridge to why this is connected to then the US and actually, global economics. We talked about the fundamentals previously, right? But um, I think you agree when I say, like, the Japan crisis is this vacuum, right? Like, if the carry trade goes away, it sucks liquidity out of the US Treasury market, and then, which is already shaky, right? And that kind of triggers more asset volatility globally. A lot of pension funds globally are into US Treasuries, etc. Right? So it's one element of a very complicated, shaky foundation, right? But it seems that Japan is this, again, canary in the coal mine, where if it happens there, there's this kind of like contamination to the rest, right? So could you maybe explain what's what is this transition mechanism? Like how does that work, right? So you have Japanese pension system and what is it? Life insurance and stuff like that. I read there's like 60 billion in unrealized
Those losses, yeah.
losses, right? From domestic bonds. How does that translate to the US and then globally? Like, why does it matter that that's the case in Japan? And yeah, what's the transmission?
Well, it matters because Japan's the largest global sovereign creditor. And so that means that for the last 30, 40 years, right, yields in Japan have been zero or even negative. And so the Japanese pension funds, the life insurance giants, right, even the banks have been basically running their own version of the carry trade, right? Which is they can borrow in yen at 0% interest with corporate bond offerings, and then they can invest abroad and make 5% or 7% in corporate bonds in the US or Europe or even elsewhere in Asia, right? And if you hedge the currency risk, maybe that costs you 50 bips. The rest of it's just basically profit, right? And that has been going on, which has forced this flow of capital, right, from Japan, which is the highest savings rate as a percent of income in the G7, to the rest of the world. So they've been basically like the world's piggy bank. So whenever the Fed or the ECB or the BOE or the Bank of Canada need to have, a bond offering and they need to have an auction and they, go out waiting around for bidders, the Japan is always right there, ready to bid up as much debt as they want and, purchase as long as it has a positive yield, because where they live, there's no positive yield. And so anything looks attractive when your, starting reference point is literally zero. But
So
that
they're
is
basically
enabled.
a fake, I don't want to say fake buyer. Well, or I don't know, maybe that's the term, but it's like they have no other choice because they cannot change it on their own side, right? Like as in
Mhm.
raise the interest rates too much or else they will implode. So in order to get this liquidity, they just buy it overseas.
Yeah. Yeah,
Hmm.
exactly.
Okay.
They search overseas for no, well, not only liquidity, right, but it's yield, right?
Yeah,
It's a
yeah, that's what I
return.
meant. Yeah,
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 it's
yeah,
some
yeah.
form of a return. But what that means
With
is
their
that,
own printed money.
oh yeah, of course, with their own printed money. But
But yeah, but
some of
that's
the,
very important, right? Like it's just right? Like, I mean,
true.
you print your own money and you buy stuff overseas to um, gain some sort of advantage over you being able
Yeah.
to print your own money.
Yeah. Well, I would say two things. So first, they've already tried printing their own money and giving, basically giving it to their own citizens, right, via QE or, the three arrows, Shinzo Abe's three arrows program back in 2013, fiscal stimulus, right, jobs programs. They've already tried that, and it didn't even move the needle, right? It took
Mm.
an obscene amount of debasement to even get the stock market to start moving. And really, it wasn't until yield curve control started in September 2016 that the Nikkei finally started showing life and emerging from the bear market lows. So, and that, that's again record debasement that was required to get us there. But they've given the Japanese consumer money before. They've stimulated the economy in as many ways as they can think, right? But fundamentally, the economy there is broken. And it's broken because there's too many companies with too much and individuals with too much debt that is unproductive. So for reference, there was a study done by S&P Global back in 2025 that found that up to 30% of the companies in the Japanese Nikkei are zombie companies. So they're basically
Wow.
that is defined as a company that is basically surviving on 0% debt financing and rolling over the debt over and over again, over time, and not actually producing real positive growth or returns for their investors. So they're essentially just housing a bunch of people in in an office building, having them work all day.
Holy
The
shit.
company makes $50 million profit that year. The interest expense is zero, so they just roll forward the debt. They use that profit to pay off whatever principal payments that they have, and then they just do it again. And so they're never actually investing in They're never focused in growing the company or expanding the market or creating new products. Their only focus is survival. Why? Because the company has 300% of debt to income ratio on its balance sheet. So it's not like they can really afford to think about anything else when they're constantly worried about the thought of being crushed by the debt. Because if that debt goes up and their margin is, say, 5%, well, then an interest rate of only 1%, 1.5% would wipe out all their profit, and they'd be cash flow negative overnight. So all they worry about is just rolling over the debt. And that, again, that's 30% of the companies in the Nikkei. And that same report also found that probably around 20% of privately held companies in Japan have the same issue, which is a holdover from 1980s, 1990s stock market bubble and real estate bubble collapsing. So the bubble was bad, the burst was bad, but it wasn't bad enough. They didn't allow it to fully flush out all the excess speculation that had taken place. Because Japan is such a risk-averse culture, like we mentioned earlier, and so focused on saving face, they don't want to. They don't want to admit that the banks are insolvent and that they've invested in bad investments like JGBs yielding 0%. Now the JGB's at 4%, and so they're down 40-50% on their holdings. I remember hearing in the 1990s, right? So as the main crisis was unfolding, Japanese banks were finding that a lot of their clients, right, a lot of these corporate entities and real estate investors and high net worth individuals were having trouble making payments on their loans, and they had fixed loans, right? And these weren't at insanely high rates. We're talking like 2 or 3% interest, but even then they were having trouble making due on their loans. And so the Japanese banks got the go-ahead from the Japanese government and the Bank of Japan to basically change the loan terms, restructure all the debt on their balance sheet to make sure that the people could continue to pay at least the principal payment. So, again, they would have called bankruptcy on all these clients. They just said, hey, if we do that, that's too much losing face. We can't do that. So we're going to lower the rate to 0. We're going to extend your payment out to 30 years instead of 10. And you guys can kick the can a little farther. So it's a masterclass in kicking the can, honestly.
Every Bitcoiner hits this moment. You need cash, maybe for a house deposit, an emergency, or a tax bill, and you're staring at your stack thinking, do I really want to sell this? Here's the thing, you don't have to. You can borrow against your Bitcoin instead, so there's also no taxable event and your stack can keep on stacking. This is where Firefish comes in, a peer-to-peer marketplace for Bitcoin-backed loans. And Firefish is not a lender. They built a protocol that makes this all possible, which is exactly why they never, ever have to touch your Bitcoin. During your loan, your Bitcoin sits in an on-chain multisig secured by open source code. You can find offers for different amounts, durations, and rates at firefish.io. And when you decide to get a loan, you can use code BRAM to get 30% off your first loan's fees. That's firefish.io and code BRAM.
I've mentioned this before many times, but when I think I got this from James Lavish, just the word nominal. Just if you think about nominal, once you get your head around just nominal, it's just numbers on a paper that people believe to be of some sort of value. When I saw that, my whole, financial rabbit hole kind of opened up, and it reminds me of what you're talking about, right? It's the same as when you have crazy hyperinflation, right? The 100 trillion USD in Zimbabwe, and you just say hey, we just take off 6 zeros, and then it's fixed. It's fixed, right? It's fixed because the number is lower, and that is better, right? And I find it so fascinating that people can actually be tricked by that, right? And what you're just sharing is well, if we just change it on paper, then the reality changes, and we don't really have to deal with what is the actual reality. Which brings me back to something else I've discussed a lot of times before. It's just how fiat money distorts your reality, right? It is literally, how you were saying, you would want, at least this is what I think, everyone in your country trying to be productive in whatever way they want, right? So whether you're a cleaner or a pilot or it doesn't really matter, right? Create the opportunity for anyone to find how they can be happy and productive, and the classic it will never feel like work and whatnot. You know, that's how you, I think, can get there, or at least be ready for when there is a shock or whatever. Like, just get your country ready and just think about the continuation of your country culture and all these things, right? But fiat money just makes it all fake. Like, you just don't know what is real anymore. So you cannot even anticipate on anything in the future, which makes you extremely risk averse, which doesn't motivate you to do anything new, everything you said before. And so I just find it so interesting that just by playing with the numbers, and people either, I don't know, I feel like some people are super conscious about it and they like play that game, and others are just bamboozled by the changing of the number. Does that make sense? Right? Like, I think it's so interesting that, because fundamentally, structurally, what we're talking about, if the debt just keeps growing, if you have to print more money, if there's lower interest, this is my next question. If there's lower interest, for example, in US treasuries, right? Central banks are shifting their balance sheets away from long duration US debt. And in 2025, foreign gold holdings were officially surpassed US foreign treasury holdings in dollar value for the first time, right? So you see that the trust, or just do air quotes, trust, right? That was, backed by the full faith and credit of the US, or what's the sentence, right? Like, that is just gone, because in reality, it doesn't work anymore. So all they have is just fiddling with numbers to see what sticks with what idiot, basically, that just then keeps on buying their debt. So yeah, that's just what I keep on coming back to. That it's just, it seems so clear to me, but I wonder what you think. Like, why is it not clear? Is it just people playing the game? Are they idiots? Like, I just don't understand why I have the feeling that I understand that to a degree, that I can take action for myself, because I have none of this background, basically. So it seems so obvious to me that it's just a scam and structurally broken, basically.
Yeah, I mean, Keynesian and neo-Keynesian economic thinking has been basically embedded and drilled into economic and finance students, since 8th or 10th grade, or whenever they took the first finance class, and especially in college, right? I went to school for finance and economics, and the only economic theory you were ever really taught was Keynesianism. And Keynesianism, and you could call it econometry, which is a study of using numbers to try to guess and control and manipulate economic variables, has become basically a science within, you could say, the academic, institutionalized West, right? And the problem with that is that it ignores basic tenets of reality, like you said, and basic tenets of common sense. So, like, for example, I've mentioned this many times, but it bears repeating. If CPI is undercounted, then nominal GDP can be positive, but real GDP can be negative. And the reason why
That's
that is,
exactly what I mean, right? Like,
yeah,
it's a plus percentage. The graph goes up, great, and everyone is happy.
yeah, exactly. So all they have to do, like, let's say GDP nominally, like the dollar value of everything produced goes up 4%, next year, right? They tell you that the CPI went up 2%, right? So you think, oh, there's been 3% growth. Wow, great. But as we know, the CPI, especially in America, has been, manipulated horribly. It's changed 18 times in the last, 26 years. So on average, like every 18 months, they're changing the basket of goods as in the CPI, right? They no longer even include, I think, bacon in the breakfast part of the CPI. They don't include, many of the mainstream breakfast items, orange juice, right? They limited it from 4 eggs to 2 eggs. They do all these hedonistic adjustments. They're like, oh, we're going to include, cereal and a McDonald's, chicken nuggets, and we'll call that good enough. Whatever is getting cheaper over time slightly, or at least not inflating as rapidly, they'll substitute that into the basket. But what that does over time, obviously, is undercount CPI by a significant margin. And all the estimates I've seen from Shadow Stats and from other independent sources is that CPI is probably undercounted by about half. So if it's 2%, the real CPI is probably 4. If it's 5, then the real CPI is probably 10. right? Which puts our realized CPI that we had in, let's say August 2022 or, June 2022, when we were back in 2021, 2022, when we were peaking in terms of CPI, not at like 9%, but at 18%, which aesthetically feels more correct to me, right? You look at the price of everything that has exploded since 2020, it doesn't feel like 2 or 3% a year. It feels much more, or even 9%. It feels much more like 20% a year compounded. But what that does obviously is over the entire economy, it allows statisticians, government economists, government planners to make the claim that real economic growth is happening, even when none is actually occurring. And they not only do this with CPI, but they do this with unemployment as well, right? They've been shifting people out of unemployment for decades and calling you not unemployed if you're not searching for work anymore, if you've just given up. Well, that's a convenient excuse. In reality, anyone who doesn't have a job who is able to work is by definition unemployed. And under the U3 unemployment that we used to use back in like May of 2006, real unemployment in the US is north of 15%, not at 3.5% or whatever they say
wow.
it is right now. So the US economy has had structural changes in it since 2008. And the same thing is basically true of basically every developed economy, right? You look at Spain, you look at Japan, you look at Canada, and the real unemployment rates there are also much higher than they are reported. So the government's able to use all these figures to lie. And again, the Keynesian economists who graduate college are all incentivized to continue to lie. Why? Because their grant, their professorship relies on government funding, or they go work for a think tank, which is funded by government grants, or they go work for a central bank, which is funded by money printing, which is endorsed by the government, right? Or they go work for an anecdotal institution, right? A financial institution that is basically an appendage of the Fed that profits from Cantillon effects. So what would be the benefit of anyone in the entire system ever calling out the scam? Right? There's no benefit. All you do is you'd lose your job and you'd make less money, and your wife would be mad at you. Like, why the hell did you lose your 200K a year job?
Yeah.
You're an idiot. We have kids to feed.
It's
So
looting,
no one does it.
looting the treasury, right?
Exactly.
That's what it is.
Yeah.
So now there's a great new option to show growth, right? I actually just Googled because I thought it would be funny to see what ended up on Google, right? Like, how can a country lower its debt, right? And in my mind, there's three options, right? You can grow, you can have financial austerity, right? Or you can restructure your debt. Or you could default. The fourth option, and there's maybe four options, right? You can just print and see who doesn't wake up to the illusion that you're creating with whatever you're printing, right? But now we have the whole AI race, right? You just mentioned the unemployment rate is probably not a good representation. GDP is not a good representation. But now AI is here, and all these valuations are going up. They're prepping for IPO. Little space travel with Elon, which is eventually also an AI company with data centers in space, XAI, stuff like that. You talk about your Peruvian Bull debt paradox, which I really like. And that's the idea that the only way to lower interest rates is via quantitative easing, but flooding the system with cash during a 2 trillion deficit instantly triggers extreme inflation, which then forces governments to spend higher. So of the options, financial austerity is off the table. We've been talking about productivity and growth. Well, I have the $200 Claude plan. I saw that I used like $4,000 in credit. So it's extremely subsidized. I've seen crazier numbers on X, right? So even in the kings of growth, it's all fake and subsidized. And I can get pretty far into the land grab strategy. They have to flood the market and whatever, competing with China, blah blah blah. But again, it's all fake. So people are talking about, well, AI is going to give growth and stuff like that. I agree to a degree, because what are all the other people going to do? I have a lot of conversations about abundance and stuff like that, but there is this crazy conundrum with this these options. Like, is there actually going to be growth through AI? If not, the financial austerity is completely off the table. Are they going to print? Like, how do you look at all these options? Because I don't think restructuring your debt or defaulting is that's probably the least favorable, or I don't know, like actually attainable option. But maybe you have different views on that. So I wonder what you think. Like, where's this going to go?
Mhm. Well, I think, I think AI definitely obviously has a potential for, unlocking massive levels of growth throughout the economy. It allows, especially like high end, white collar skills like Python coding or, account balancing
Yeah,
with
but not
regards to
like
your
steel
balance sheet much
manufacturing.
faster.
I mean,
Yeah, no, but it doesn't do steel manufacturing. It doesn't create more real, goods and services. It creates more virtual goods and services very
yeah.
easily, or
Mm,
deals with customer complaints or whatever. Like anything that can be done over the internet, or with a VA from the Philippines or whatever, can now be done much more easily, and for cheaper with AI. And like you said, right now, Claude and many other models are doing this, are basically offering like the premium paid plans to consumers at a loss, at a huge loss, in order to snag enterprise consumers, B2B. So they're basically trying to show people like, oh, hey, look, like your average consumer is using this thing. It's so helpful. Let's get your company signed up for 500 seats. Each seat is $300 a month.
yeah.
And you have maximum quota limits of how many tokens you can use. And so that's where the real profit lies, not in just selling $20 or $30 a month cloud subscriptions to you or me, or even $200. Overall, though, the problem with the AI, I view it as AI is highly inflationary. And obviously that's like a consensus view, but my view on it is like the reason why is different, right? The typical AI inflationists, they contend that AI will bring down the prices of software and of goods and services, right? But they say that to get there, like the way we get there is by spending a crap ton of money in capex, right? So we're going to see build outs of data centers, build outs of high speed fiber optic internet, all the
Energy.
infrastructure,
Yeah.
like
Yeah.
rework the electric grid. That's their conduit for inflation. I don't see that. What I see is AI, the proliferation of AI, right? Especially for white collar jobs, and especially initially, will absolutely decimate the worker base, right? And in the U.S., GDP, consumer spending is 70% of GDP, and over half of that is from, half of that consumer spending is from the top 10% income earners. So think about lawyers, doctors,
Yeah.
software
Yeah. Yeah.
engineers.
Yeah. Great point.
They're making a ton of money, so they're going out and spending a ton of money. They're going out and buying new cars, new houses, et cetera, et cetera, et cetera. And so when you eliminate their
Do you have a
jobs,
number on that? Sorry, I'm just thinking. Do you have a number on that? Like, is
top
it?
10% earn about a little over, I think it's like 58%,
Yeah, I
or
mean,
spend 58%
spending. Sorry.
The top 10% of income earners constitute about 58% of all consumer spending.
Exactly. Okay. Crazy.
Yeah.
Yeah. Yeah. Makes sense.
So actually, yeah, definitely more than half. But the problem is, okay, again, these people are the people whose jobs are at risk, not
Exactly.
the
Yeah.
not the guy who's like a cashier at Walmart or the cashier at Target or the janitor or the plumber. Those jobs aren't at risk. What's at risk is, why would I pay a highly paid software engineer $300K a year when I can have Claude Code do it for $200 a month, and I can automate his job basically? Or I can have a lower paid engineer, right? $100,000 a year engineer, $80,000 engineer who just understands, coding and software,
Yeah.
just use Claude Code to basically do a much higher level engineer's job much faster, right? So that's the first thing that's going to happen. But when that happens, right, when all these people get laid off, when they stop working, the tax receipts correlated with them will collapse too, because the government, a large part of the government tax revenue is basically a tax on time, right? We're talking payroll tax, social
Yep.
security
Yeah. Yeah.
tax,
Yeah.
income tax, right? Consumer spending taxes, like in my state, we have in Washington, there's a consumer spending tax of like 6-7% on most goods, right? There's gas taxes. Well, they'll travel less, so they'll spend less on gas and on travel. So you're going to get less income from that. So government sources of revenue collapse. And at the same time, right, you'll have more and more people looking for unemployment assistance, looking for welfare, right, looking for any sort of government handout that they can. So it's going to put more strain on government budgets, which is going to cause them to print more, right, which just devalues the dollar and whatever currency that, where you are even further. Now, again, I don't know if this will be the catalyst that drives us to the, the proverbial endgame, right? I think the actual forces of the debt are so much bigger that this might speed things up, but we're already going to have inflation and financial repression anyways. But this can definitely speed up the timeline, just like COVID did.
I love that take. I think where I've talked about AI being deflationary, I think it's way more conceptually, which I think is correct. But you're making it practical, which I think is very fascinating and interesting. That it all adds to this entire conundrum, right? Like how um, it's funny because in a debt based fiat system, it's also that a lot of people, I see this in my country too, right? Like a lot of people have become more and more dependent on the government. The government is also making people more dependent, but people also want to be more dependent, right? Because there's all these unsure times and little shocks here and there, and it's like chaotic. But in the US, I do think that system is a bit different. But when shit hits the fan, right? If 40% of that top 10% gets laid off, right? Like what are they gonna do, right? Like those are the people you would have never thought would have asked for government assistance, for example,
Mhm.
right? And like you said, they're gonna do that. So I find that extremely interesting how impractical it is for the US to actually deal with it. Especially, this was my next question, right? Like the US debt is almost 40 trillion, which is wild. Ever since I really started talking about Bitcoin, I think we started at like 29 trillion or 28 or something like that. When I started paying attention, I
Yeah.
would say,
Yeah.
right? So it's
And that
insane,
figure was crazy, right? That figure was already crazy.
mind-boggling, right? How big that is, and still people are buying U.S. Treasuries. With it's just it's insane. Um, but I read right the 40 trillion is heavily outpacing old Congressional Budget Office projections, which just
Mhm.
made me laugh. Right, like no surprise. Why would you even communicate the actual rate? Right, just the rate of how the debt is growing because it's just unpayable. Like I don't know anyone who would think that that would be um, uh, attainable in in their lifetime, right? Like it doesn't make sense. So I wanted to ask you for your highest like contrarian take. Maybe it was the AI take of just now, but like what is the structural reality about the financial system in the US over, let's say, the next 18, 24 months that you think most institutional like analysts or the people on TV would think is crazy, but you think is mathematically guaranteed?
Ooh, that's a hard one. I mean, because a lot of my takes you could say are like somewhat contrarian, but are pretty accepted within Bitcoin.
Hmm.
So, like SPY goes up forever, or the
Yeah.
Fed find new ways of easing.
Yeah.
Um, Actually, I guess okay. One thing I think is, and this could be a quasi contrarian take. I have heard other people speculate this, but I think it actually got a lot of legs to it. I think the U.S. is going to do yield curve control.
Hmm.
And I think it's going to happen um, likely because of long-term stress and especially the long end, right, treasury market. So, years or months in a row of high tail auctions, of low bid to covers, of problems, emerging with the move index, for example, which is the treasury volatility index. Once it spikes above like I think 80, it's marking problems in the US treasury market. If we see continued stress, just like kind of like especially in the repo markets like we did in actually October of 2025, which would force the Fed to, let's say turn around and start start easing like they did, right? They stopped the taper and basically have started to slowly add back liquidity into bank reserves. I think it's very likely that you could see a program or a form of yield curve control uh, basically put in place by the Fed. And that would mean that, let's say not necessarily 0%, but let's say they target 1% rates or 1.5%. They would buy as many treasuries as it takes to get there.
Yeah.
And that would ease the long-term pressure on interest rates. That would ease the treasury interest expense death spiral. But it would be at the expense of blowing up the balance sheet. And the reason why it would blow up the balance sheet is because functionally, like, you don't lower yields without doing QE, which is why what Warsh thinks he's going to do, to me, is completely impossible, right? He wants to lower rates and lower the balance sheet. Now, again, typically lowering rates means QE, which means printing, bank reserves to buy cash, or to buy assets, which increases the balance sheet. So he's trying to go in two different directions, which is impossible. You have to go in one direction. And I think yield curve control is a much more likely option than what most people think, especially in the next, let's say, like 18 months. And again, there's different versions of yield curve control you can do. Obviously, you can do hard yield curve control, where you basically, do cap yields on all the tenors and all the issuances of U.S. Treasuries. So you say, okay, across the entire yield curve, the 1 year can't go above 0.5%, the 10-year can't go above 1%, or then the 30-year can't go above 2%, right?
Yeah.
But you can do other examples of it. Like, they could do yield curve control for only the long end, which I think is probably what they would start with. So I think that's very possible. And in that scenario, Bitcoin would probably rally very, very powerfully.
Yeah. This is so interesting, right? Again, I think that once you go down the money and Bitcoin rabbit hole, you just, I don't know, you kind of like change your thinking about, again, how everything is just fake. Literally, yield curve control is basically saying there's no free market for pricing our debt or our credit worthiness, basically, right? Like, so there shouldn't be a free market for determining our credit worthiness, i.e., the yields on the treasuries, right? We're just going to set it because, or else it's just going to get worse, right? Like, I don't know, like, that is that too simplistic? If that intervention, I mean, to see that as basically a confession that it will never solve itself, basically, right? Like, is that one of the last, I would say, things that they could pull? Or
that's one of the last tools in the toolbox. But even then, like, you don't necessarily see hyperinflation right away, right? What you'd first see is obviously a massive rally in risk assets. So S&P 500, Bitcoin, gold,
because it signals low trust in a currency, I would say.
Oh, absolutely. Yeah.
Yeah,
Well,
okay.
the bigger thing is that it's an unlimited QE program. So every other
so it's
QE
free
program,
money. It's more soft money, and you should buy hard stuff with that, right? Like,
yes,
the more soft money there is, the softer it becomes. So you buy hard stuff.
yeah.
Yeah.
But again, like, it's unlimited. So, like, you don't. The problem is you especially as, like, let's say you're a trader at a investment investment trading desk, right, or a hedge fund, right? You can't accurately model out liquidity flows for 6 months or 12 months, because with yield curve control, the nature of the beast is that you do not know how much the central bank is going to buy in terms of bonds that month, right? With even QE 1, 2, 3, and 4, 4 was the most recent. Even with QE 4, they first said unlimited bond purchases for like 2 weeks, right? But then they realized, like, oh, that's very excessive. We're going to limit it to $120 billion a month, right? And it's going to be like $90 billion of treasuries and $30 billion of MBS. So they told the market what they would be buying and how long they'd be doing it for, roughly, right? And then once they start to slow down the purchases, they announced it months in advance, right? At an FOMC meeting in like March of 2020 or February of 2022, they said, oh, by March, we're going to start reducing by this much, right? That's when the taper begins. With yield curve control, there's no control of that, because the Bank of the Bank of Japan or the Fed or the Bank of Canada or whoever does it has no idea how much pressure is going to build up in the market that month.
Yeah,
And so the
yeah, yeah,
first month they could be spending 400, 500 billion dollars.
yeah,
Next month could be 50. The next month could be 300.
yeah.
There's no way
But a
to
precedent
judge.
is also set, right? Like the
Yeah,
precedent is set then. Yeah, yeah,
exactly. But like, again, look at the price of Bitcoin in yen. It's way higher than where it is in dollars,
yeah,
right? And that's partially because since the Bank of Japan did a yield curve control program and did unlimited QE, people know that there is no end to the amount of money that they could print. You know, even the illusion of QE at least has like a number to it. Okay, they're only going to make this much money. Yes, they're going to devalue the money. Yes, they're going to create it at no cost to them, but they're all going to make $120 billion a month. With yield curve control, the entire cat's out the bag, right? The flies out the window, whatever you
yeah,
want, whatever
exactly.
phrase you want
Yeah,
to use. There's no limit. So, risk-taking behavior in terms of monetary hedges like gold and Bitcoin explodes. So everyone just piles in.
yeah. So, question I have for you then: what we've seen is that when there are these kind of like macro liquidity shocks, I think there was yen carry trade related stuff going on. I don't know. I'm very bad at like dates, but I want to say at the end of 2025 or what you just mentioned, that October. Anyway, like you see Bitcoin has these corrections, right? Like for example, on the weekend, it seems like people are using Bitcoin as liquidity to actually plug the holes that
Mhm.
are created at the Friday afternoon trading session, basically. Which for me, I posted about that before. For me, that's like super bullish. I think it's just very interesting that Bitcoin is global liquidity, right? Like if you need liquidity on a Sunday to prepare for a Monday open, you use Bitcoin basically. And when Bitcoin is sold in these times, obviously we see a downward correction. How do we help people understand the distinction between that? Do you agree with what I'm saying, by the way, like that it's used as liquidity, which is bullish, right? But also that it's connected to the longer term thesis of Bitcoin being uncorruptible money, right? Which is, in the short term, it's used to defend, debt-based fiat fuckery, basically. But that is the actual thesis of Bitcoin as well.
Yeah, I think that's the Trojan horse nature, right? Previously, treasuries were used as a liquidity sink, right? Previously, even foreign currencies were used, right? Or corporate bonds or whatever. But then the problem was, obviously, you can't trade it on the weekends. You can't trade it at night. You can't trade on holidays. And so, if you're a market maker, you're a hedge fund, you're a prop trader, whatever kind of, book you're running, if you run into liquidity issues and you need to sell and it's not during market hours, you're going no bid. You're just screwed. But
Yeah,
Bitcoin provides 24/7, 365 liquidity anywhere in the world, right? Instantly. And so what that means is that for the current, let's say the next 5-10 years, Bitcoin is simply the superior liquidity sponge, right? So superior
yeah,
place to store your cash temporarily and then to sell it if you need to raise more liquidity to deal with a debt obligation. But long term, it's a shift in the way that market participants think about storing value and where to store it, right? Instead of US treasuries, you store it into Bitcoin. And that is a much more important psychological shift, right?
yeah,
And it's going to take a long time because the people running these institutions, right, even the central banks, but the hedge funds, the big banks, the prop traders, the sovereign wealth funds, they're all in their 50s and 60s. And so they barely understand Bitcoin as it is. But as the asset matures and as their familiarity with it increases, I think we're going to see Bitcoin be used more and more as a liquidity and inflation hedge than anything else. And so I think systemically there's going to be more and more funds flowing into Bitcoin long term. The ETFs I think are just the beginning. And a lot of Bitcoiners will be angry at this, right? They want it to be like only used by cypherpunks, like fuck the bankers, fuck all these rich people. They shouldn't be in it. It should just be us, just the plebs. But if you want to take over the global economy, you have to get buy-in from everybody. And that means the rich people and the banks too. And what the banks don't realize that this eventually obsoletes them, but in the short term, it's just a superior liquidity sponge for them to use.
yeah. So if your thesis plays out and the global financial system undergoes this massive repricing, right? There's a loss of trust. Bonds are
Yeah.
repriced. They lose their status, right, as reliable assets. I think we mentioned that, and that's also a general theme, I think, in just your entire um, reading of this situation, right? But it just happens very, very slowly. I wonder, what do you think happens to, all these monetary premiums in real estate, all like legacy equities, max
Mhm.
7 maybe even, right? Just corporate debt, stuff like that. Uh, which I think is something people talk about when they talk about, for example, monetary premium in real estate, comes from the fact, that fiat money cannot be used as a store of value, etc. Right? But if there's this global unwinding, what happens there? Eventually, I would say it's a good thing because it just prices it at what it should actually be valued, which is good eventually. But in the short term, it's pretty chaotic. So I wonder what you think about that.
Yeah, I think eventually it does erode away the monetary premium, but it takes right some extreme action by the central bank or just general economic indicators for that to happen. So, as I'm sure you've heard in Weimar, Germany, right, there were multiple buildings in downtown Berlin for sale for a few gold coins, right, which was probably 100th of their value pre hyperinflation, pre-war, right. Um, Silver was used broadly in Weimar Germany. Same with even like this new Reichsmark that was used with backed by land to buy and sell things, even fuel coupons, right? All of those were used as forms of money rather than just the traditional Weimar mark because it was so worthless by the end. But
Hmm.
for us to get there, where all the monetary premium was wiped out and people are selling only for hard money, right, for gold or silver or in our case Bitcoin, takes a lot of economic pain. And unfortunately, what people have found out, and what I've seen, anecdotally and literally in markets, is that the monetary premium can go a lot higher and last a lot longer than most people think. So, if you had told me that 2020 would happen, the market, the economy would shut down, 30% of small businesses would close in the US and the S&P would be hitting record highs within 2 months, I would tell
Wild.
you that you're insane, right? I
Yeah,
would tell
yeah,
you that
yeah,
you're
yeah, yeah,
crazy. Back in
yeah.
2016, 2015, when I
Mm,
was first getting into macro. And instead, what played out was exactly what the bull said would happen is the market, the assets have all become a liquidity sponge. And in lieu of a better form of money that people have access to, which obviously is Bitcoin, but most people, haven't discovered that yet. They shove all their savings into real estate. They shove all their savings into
yeah, yeah,
stocks.
yeah,
And a
yeah,
lot of this is passive too, by the way. This is what Mike Green points out. Like, there's what $100 billion a week of passive inflows into equity funds because why? Because you have millions of Americans all around the the US, but even the world who work for American companies. And what do? They have a 401k, they earn a paycheck, they get a 5% match, right? So 5% of their paycheck every 2 weeks goes into the S&P 500 or
yeah,
into some related fund.
yeah.
And so there's just billions of dollars flowing in all the time. So how do you outrun that? You can't really, which is why the US stock market never really goes down anymore. And it's
Yeah.
a meme, but it's also a reality.
I love, this translates in my head to the bullish case for Bitcoin, like how early it is, what an asymmetric opportunity it is, like
Mhm.
how many people, if you agree with, the bigger thesis of, well, in essence, fiat monetary debasement is assured over time, right? And there's still all this fuckery before you get there. There's just blind following whatever some financial advisor says, right? Or what all the other people do, or, what you just said. But this is actually fundamentally just a flawed system. And eventually it is going to go there. So I think once you see that, whether it's 10 or 20 or 30 years from now, or even if it's just for your kids, maybe even that's sometimes something I think, when we think about Bitcoin, probably we're doing this for our kids and we're maybe
Mhm.
not even going to see it, but that's where it's going to go. Right. And so that's why Bitcoin is such an opportunity. That's still, if you have $100 billion a week just flowing into that stuff, just passively, just because whatever, um, yeah, I think it's just so fascinating that it's so clear that you need to get to Bitcoin eventually. And it also makes me happy that it feels that we're still early, which a lot of people would disagree with when you still say that. But I do think that's still the case. All right. Yeah, to wrap up, your Substack, your study, your thesis, it kind of maps out some very dark, macro reality, which I really enjoy exploring because, yeah, I just think it's unfortunately just what is going on, right? But you also mentioned somewhere I saw you are also highly white-pilled on like a post-fiat future. When you look at, your idea of the transition chaos, what does that look like after that with Bitcoin, or like on a Bitcoin standard, or however you see that? Like, what does it look like?
I think it looks like, obviously a complete political reorganization of the world, right? Nation states will not exist in their current form. You won't see large centralized governments with central banks being able to command huge amounts of power, much more decentralized, much smaller and weaker nation states. But on the other plus side, obviously, is much more robust economy. The greatest period of economic growth of any country and any nation in all of time was the US from 1870 to 1893. In those 23 years, we experienced essentially like 6 to 7% real GDP growth, around 8% real wage growth year after year, and consistent deflation, not inflation. In the 1800s, we started the century right with dirt roads and buggies, and we ended it with trains and telegraph and the early forms of the combustion engine. So industrialization was well underway by late 1800s, early 1900s. That period happened with no central bank, no federal income tax, no Social Security, no Medicare, no Medicaid, no large government jobs programs. It happened because of the people working and building a better future for themselves with low taxes and low interference from the government. And I believe we can get back there again. And I believe we can have another golden age again. But it just depends on us being able to, throw off the proverbial chains, so to speak, of the fiat system and to enter a new world, right? Under a Bitcoin standard, there is no incentive to profit from or to try to profit from cantillon effects because there is none, right? You can't get closer to a money printer. There's no incentive to draw people away from fields like engineering and put them into fields like finance where, for example, high frequency trading firms like Citadel or Susquehanna or Virtu, they pay, electrical engineers, radio engineers, hundreds of thousands of dollars a year so they can figure out how to front run retail trades by another millionth of a second, like literally a millionth of a second. So we have our best minds spending all their time and energy just figuring out how to eke a few more basis points, a little bit more yield out of arbitraging, this currency versus that currency.
Yep.
All of it is nonsense. All of it is bullshit. If you took all those people, which is, again, finance is 7% of the US's GDP.
Oh,
And it should
really?
probably
Wow, I
be,
didn't know that.
yeah, it's 7% of US GDP. Which is double what it should be by historical standards. If you took all those people, right, which is millions of people, and you put them into actual careers like engineering, right, that created actual goods, imagine the amount of real goods and services we would have. We'd absolutely see an explosion of prosperity. So
Yeah.
that's the white pill. That's what I think is lying on the other side of the gate.
I think we have a topic for our next podcast. I would love to explore that because I the zooming out to, what does it take to propagate a country, a culture? What does that even look like? I think that would be a fun exploration. But yeah, man, thanks so much for sharing. I thought it was really interesting, hopefully helpful to people listening too. And let's stay in touch. Thank you.
Absolutely, will do. Thank you.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, if you want to help me shine a light on the message of Bitcoin, please like this video and subscribe to stay connected. I hope to see you for our next episode. Bye.